Hey everyone, just going to wait till 8 a.m. Eastern sharp, so another 5-6 minutes here. And I will be responding to questions in the YouTube chat, but not until I open it up for that. So if you do want questions answered or charts looked at, wait until I say so. And I'm going to go through my rundown here and cover the big three, and then we'll take it from there. Going live in 2 minutes. All right, let's get going. Thank you, everybody, for joining us. First off, just want to express my appreciation to everybody that is following along in the YouTube channel and all the daily videos and all the likes and the shares and the comments. I definitely enjoy interacting with everybody, and it certainly is motivating for us to keep that content coming as long as people keep appreciating it. So definitely thankful for all of that interaction. So today we are releasing our cryptocurrency course, and this is something that originally started off in my mind as, you know, just a basic, quick course. I wanted to put out something about 2 hours long and put down the information that I use to navigate this cryptocurrency space, and have been navigating it successfully over the past 4 or 5 months. And then as I started diving down the rabbit hole, it just became more and more of a project, and it's now 6 hours long at this point. So definitely overshot the goal of length, and just really put a lot of time and effort into this, and I do believe it is the most comprehensive course that is available on trading the cryptocurrency space right now. And in combination with our other course, the Entries and Exits course, that's really the foundation. The Entries and Exits course is more so for the basics of technical analysis, and then it's applying those basics of technical analysis to the cryptocurrency space with some tweaks in how I trade the cryptocurrency space with that information, and the different strategies that I use and everything like that. So very, very excited to announce it. The price is going to be $149. It's free to all The Chart Guys members at this point. And to be honest, I do believe it is underpriced. And I opened my big mouth before I realized the scope of the project and said that it would be cheaper than our other course because I was anticipating it to only be a couple hours long. So I do believe that it is very nicely priced for everybody. And just quick, let's go over what it is going to entail in terms of the content here. And it's a very similar format to our other course, but in terms of the main modules here, we've got the introduction, and you can just read along here. I don't have to read them all to you, but brief history, trading stocks versus crypto, going over psychology and systems, and really just over the past 6 weeks, put in a lot of time and effort. Essentially, the first thing that I did to construct this course was ask all of our members, if I were going to make a course on cryptocurrency, what would you want to know? And got, 100 responses for things that people want more information on. So I took those answers and then I laid them out and organized them in a way that I thought would best benefit everybody getting these questions answered, and then put my own spin on everything in terms of, delving deeper into aspects that I felt were more important and deserved more light. So we've got psychology and systems, indicators and analysis, execution, tools that we use, and then the conclusion. So all of this information in this page is linked in the description of this live video going on right now. So by all means, check that out and read up on this and see if it is something that you would like to give a shot. And we do have a bundle going where if you haven't purchased the Entries and Exits course yet, if you buy them both together, we'll take 20% off the total. So that would be a total of, let's see, it's $200 for the Entries and Exits course, $149 for this. So the total would be $279 if you buy both at the same time. And by all means, if you take this course, we would love to hear your feedback. There's a spot here to leave some feedback. We've already released it to a couple members beforehand just to see how they responded to it, and so far so good. So now I just want to go into a hectic few days here looking at the big three, and then after I go through my rundown of the analysis here on the big three with a focus on longer term timeframes as well, I'll open it up to some questions and then some other, perhaps some altcoin charts that we can be looking at. So starting it off with Bitcoin on the weekly time frame. And so we've had a pretty crazy 3 days, a big pullback. And one thing that the cryptocurrency space has taught us is that it goes stairs up and elevator down. And that's the same with stocks. It's just fear is a lot more powerful emotion than euphoria. So we can stair step up, and in one day we can take out 5 days of bullish action just because stop losses get triggered. And people get, people feel that fear and jump out and magnify that pullback. So checking in on the weekly time frame, we have a big upper wick of profit taking from the all-time high, and we have a couple fundamental scenarios of what are going on. And we've got the Goldman Sachs put out their release with their Elliott wave theory, saying that Bitcoin is going to top out at 48. I forget the exact price, but 48 something. So in my opinion, Goldman Sachs going on public record to say that that gives them incentive to have money in the game to short Bitcoin, because it's going to make them look good if they nail that prediction. Right now, they're putting themselves in center stage for the cryptocurrency space by being, an investment bank getting into the space and putting out some analysis on it. So for them to nail that move, that would make them look really good. And I do believe they would put millions of dollars, if not tens of millions of dollars, behind that call. So it's not surprising that we pulled back from just under 5,000 psychological resistance. And once we saw that selling pressure begin, we saw a lot of people take their profit as well. And again, that's where it just gets magnified on the size of the pullback. So they called for a very significant pullback. I'm not going to say that that's likely to happen at this point, not seeing enough weakness. You see this weekly chart and it looks just fine, even though we have pulled back very significant the past few days. So at this point, I'm watching this low here from 2 weeks ago. That low of 3583, that's a very important level for me because we had major consolidation from the previous all-time high, and we bounced off that level and then saw a new all-time high. So as long as this consolidation forms a new all-time high compared, or I should say a higher low compared to this level, that keeps the bulls in full control. So 3583 is an important long-term weekly support for me on this Bitcoin weekly chart. So now let's zoom in for some more detail. The daily chart. And this candlestick just flipped over 6 minutes ago. So we can see some fairly significant consolidation where we dropped essentially 49.80 all the way down to 42.34. So we did pull back about $650 in 3 days. That's very significant. That's a significant percentage. And the bulls did buy the dip. We had support down here at 42.34. I was watching support of 4,200. We can see we consolidated off that round psychological number before continuation. So the bulls did hold that level. And this daily candlestick that did just form is a bullish reversal hammer, but we are not on our way to confirming it. Obviously, only 6 minutes into this candlestick, we got a long way to go. But the bulls need to turn things around and get back into the 4600s if they want a chance to confirm this bullish reversal hammer today, which again just started 6 minutes ago. So zooming in on a little bit more information, we got the 4-hour time frame showing the significant pullback. And one thing I do like about this setup with all these big three is we can be looking at the failed bounce attempt, and I guess failed is all relative because for traders that were just playing the bounce, it was a very successful bounce. But in terms of turning the trend around and preventing from further downside, it was a failure by the bulls. So we can look at that, and the number one thing I'm looking at is volume. And you see the volume on the bounce attempt from 2 days ago where we had a weak follow through and big upper wicks of profit taking. Look at this volume and then look at the volume we're seeing now at this bottom. It's hundreds of percent more volume. So the big bullish reversal 4-hour candlestick with volume of 6,000 Bitcoin, that's the highest volume candlestick that we have seen since this big bull volume candlestick, but it is overshadowing the last bounce attempt and the bull volume behind it. So this bull volume is a lot more believable. That being said, we did not confirm this bullish reversal candlestick. We set the high of the bounce at 45.82, and I'm going to round on Bitcoin. So 45.82 is our new key resistance to be watching that the bulls have to break in order to see continuation. The high of this bounce right now is just another lower high on this pullback. If the bulls want to turn this trend around, they have to see a higher low and then a higher high. So at this point, we're consolidating now from the top of our bounce, and we have to form a higher low compared to 42.34 and then turn right around and head to a higher high over 45.82 sometime in the next 24 hours or so, ideally. If we do see that happen, we will see a bullish MACD cross go along with it. We know that bullish MACD cross on the 4-hour time frame has led to very significant bullish gains in the past on all of these big three. So that's something the bulls are looking for. Have to form a higher low. We'll be looking for a bullish reversal candlestick to do so. Some red flags would be if we see increasing bear volume on this consolidation, that would make it less likely that the bulls are going to be able to form this higher low and then try and get that higher high. 4-hour RSI was a signal that we were seeing the bottom, as is the volume climax down here. 4-hour RSI on Bitcoin got to the lowest point that it has been all the way back here in July. So mid-July, we were down at this level in the RSI, but not since then, and that's where we have seen this bounce play out. So zooming in again for the hourly time frame for more details. And this was a scenario where having a feel for charts and looking at the charts, thousands of charts over years definitely plays out, because I look at this bounce coming off of the low and I see very powerful volume and a strong 2-hour bounce. But I'm telling myself, okay, if we're coming off the low, there's no way we're going to just turn things around from that low. Again, just like I said on the 4-hour time frame, we have to set a higher low and a higher high for the bulls to prove their momentum. So it was a really nice bounce to be had, but I would be cautious up here because we are likely to consolidate and need to form that higher low. So we had a bearish reversal doji at the top of this bull move, and we're now confirming it with this pullback. The one good thing for the bears, or the bulls I should say at this point, is declining bear volume on this pullback. So that is something that would have us assume that we are more likely than not to see a higher low form. I'll be watching for an hourly bullish reversal candlestick as a signal, and then we'll be looking for the bulls to show back up and try to see this higher high. So far, so good for this bounce. We are pulling back, and we have to form a higher low, but the volume is telling us that the bulls have a good shot to potentially see some continuation here in their favor. So again, you can keep zooming in and just get more and more details. At this point, if I were looking for a re-entry in Bitcoin, and I've been playing Ethereum today, I'll go over my trades here after I give the rundown of these big three. But on this 15-minute time frame, now that we're seeing lower highs and lower lows, we have to look and see higher lows and higher highs begin to form again on this 15-minute time frame. So if we see this on the 15-minute time frame, then we know the hourly candlestick is likely forming a bullish reversal candlestick, which we will just flip back and check on once that does occur. Right now, I'm looking at support below this consolidation candlestick, and that's down there at 44.25. So we'll see if we can hold that support. That would be ideal for the bulls. If we can't hold 44.25, I'm watching 43.60, the low of this consolidation candlestick, where the bulls bought that dip and then saw continuation on the bounce playing out. So that's what I'm looking at on these names. The one difference here between Bitcoin and Ethereum and Litecoin, Ethereum and Litecoin are correlated more strong. They're stronger correlation to each other than they are to Bitcoin at this point, because Bitcoin here got a lower low before the bounce played out, and Ethereum and Litecoin got a higher low. And I actually was using that higher low on Ethereum as an entry point. So that chart looked better to me, those two charts. The fact that we did get a higher low showed me sooner that the bulls did have a bit of control. So we are in consolidation mode. We are looking for a higher low to form sometime overnight, and then we will look for the bulls to head back up to our recent high. So Ethereum, a lot of the same information, but what I'm looking at on Ethereum, and I was actually discussing this with a member a couple days ago, is the potential for an equilibrium pattern on this weekly time frame. So as we know, after huge bull moves or huge bear moves and dumps, we see an equilibrium pattern with a tightening range. So here's our all-time high, here's our dump, and our higher low at 130. Now we have a lower high, and that was a bearish reversal candlestick. It was a lower high just under 400, and now we're going to pull back and form a higher low. So I looked at this chart with this member just in our chat room, and it was forming this bearish reversal candlestick. So I looked at this and said it would be very easy to drop down to 280. And if I would look at this chart, and if this were any regular old stock, I would look for a pullback down to the 230 area, just looking at the visualization of the equilibrium pattern that I see form on every time frame, on every stock or commodity that you can possibly look at. So we would look for a higher low to form somewhere around the 230 area. The reason that I would not, what I've been doing with my analysis for the cryptocurrency space is taking everything with a grain of salt and making it a little bit more bullish, because we've been seeing so much bullish action that the pullbacks are shorter lived. The pullbacks do not go as significantly as I would anticipate them to. So that's why, rather than looking for a pullback to 230, I chose 280 and said we could see 280 very quickly. So at this point, we are confirming the bearish reversal candlestick, and we are looking at a long-term weekly equilibrium pattern. And if this is how it's going to play out, and if this is going to stick to an equilibrium pattern, this could play out for another 3 months or so, just getting tighter and tighter, even longer than that. So we could be in a very long-term tightening range on Ethereum with volatility dropping off. That being said, there's also the psychology here of a cup and handle pattern, where we have our left side of the cup, our pullback, our right side of the cup is a lower high. The bulls couldn't break that level. We consolidate in a handle pattern, and then we see a breakout to new all-time highs. Not saying that's going to happen. This is something that I always keep an eye on. I never make any trade decisions based on a cup and handle pattern, but I will be keeping an eye on this. And something that would negate it for me would be if we were to see next week another big significant red week and a pullback into the mid $200 range. That would negate the possibility for this pattern for me. But at this point, it is still a viable pattern to be keeping an eye on. It all depends on how significant the consolidation is and how much bear volume is behind that consolidation. So let's zoom in for more details. We'll look at the daily time frame at this point. So daily time frame, very significant dump, and there is definitely some reaction to the Chinese news with no ICOs. As a factor here, Ethereum has been weaker than both Bitcoin and Litecoin on this pullback. And I can say that because the 4-hour RSI got oversold a lot sooner. The pullback has been a lot more magnified. So both NEO and Ethereum are being hit by that Chinese news. It's definitely a factor. And at this point, it's not a game changer, obviously. Ethereum's not, going to tank and disappear. we have this key support here of 267. So that 267 support, the bulls really want to form a higher low compared to that level. And as of right now, we do have that higher low at 285. So we have the bulls attempting to bounce and form a higher low. This is not a bullish reversal candlestick. We're going to form an inside bar today. Again, this candlestick just formed 15 minutes ago, so we got 24 hours here. This is going to very, very likely be an inside bar. And then we'll watch this inside bar as it forms. Tomorrow, being Wednesday, we'll see Wednesday if we get a break of this daily inside bar, but anticipating some consolidation to come because of these wild movements. 4-hour time frame for more detail. Same thing. Look at the last bounce attempt. Let's get rid of this line so we can see that volume. Look at these volume bars. On the last bounce attempt, oh, I deleted my volume bars. What a jerk. We'll just go right here. So 4-hour time frame. And let's look at the last bounce attempt. Get rid of some of these lines. So the last bounce attempt, the volume here, I'm seeing candlesticks of 60,000, 32,000, 27,000. This bull candlestick had 127,000 coins behind it. Way more volume. We're talking 100% more volume than the bounce attempt on the last time. So this is a very significant candlestick. The high of the bounce at this point is 3370. That is our new top. So our range right now is 285 and that top of 333.70. Let's call it 334. And now we're going to look for a tightening range, that good old equilibrium pattern that keeps coming out on every time frame. We're going to look for a higher low here. So it is, we did not confirm the bullish reversal candlestick, but the bears, I should say the bulls, want to see declining bear volume on a pullback, a bullish reversal candlestick indicating our higher low has formed, and then a move back up to test this 334 resistance. If we do get that, same thing as Bitcoin, we will get a bullish MACD cross going along with that. So at this point, we are consolidating, hourly time frame, showing this consolidation, declining volume. There's actually a slight incline in volume, but whenever I look at the volume, I'm always looking at the candlestick shape as well. So this candlestick was the majority was bear volume. This candlestick has a nice solid lower wick at the base, so that tells me that's a lot of bull volume in there as well. So I can disregard the slight uptick in volume here and not call that bearish because the lower wick tells me some of that was bulls buying the dip. We now have an inside bar forming on the hourly time frame to keep an eye on. If we break the low of this consolidation of 312.50 at this point, I'm looking down to 300 psychological as the next support level. So same thing, we need a bullish reversal candlestick on the hourly time frame, indicating that our higher low is likely being set, and then the bulls to make their way back up to the recent high. So at this point, I'm just patiently waiting until the 15-minute time frame goes from these lower highs and lower lows, and it gives me a higher low and a higher high. Because when that happens, we will be looking for a bullish reversal candlestick on the hourly time frame. Very nice volume. Look at this ideal volume. This is exactly what the bulls want to see, where they see increasing bull volume from the bottom. They see low volume consolidation, more increasing bull volume. These three candlesticks are very convincing for the bulls. Look at the two candlesticks of consolidation afterwards. Declining volume, pretty low volume, and then the bulls hit their top and have now consolidated a bit more significantly. But again, no red flags with the volume on this consolidation at this point. That is a high red volume candlestick, or I should say a high red volume bar. But again, you look at the candlestick and say, oh, some of that was bull volume. Look at that upper wick. We pushed to higher highs. So some of this candlestick was definitely bull volume before the bears took over. So I do not see any red flags at this point on this 15-minute time frame. So I will be scouting an entry in Ethereum unless I see some signs in the other names that I like more. But I've been trading Ethereum twice on this bounce and really liking the way it's trading and really comfortable with it. So I'm going to stick with Ethereum at this point, and that will be my game plan heading into tonight. So I have traded Ethereum multiple times the past few days. I'll go over my trades today after we go over Litecoin here. So Litecoin on the weekly time frame has begun pulling back, and it is a fairly significant pullback from the top, 98.28, all the way down to 64. That is a very significant pullback of roughly 40% just off the top of my head. So at this point, obviously, this chart is not broken. It's a very bullish chart, very healthy, but we know when we shoot up that significantly that we are going to see significant consolidation. So the daily time frame has been pulling back. And again, the increase in bear volume here, some of that is bulls buying the dip with the lower wick. We had a nice inside bar here with a very clear bear signal. And look at the multiple inside bars. So our breakout, tightening range, higher lows, lower highs, higher lows, lower highs, clear bear break once the inside bar of 77.26 broke to the downside. So that was a bear signal. And now we are looking to likely form an inside bar over the next 23 hours and 40 minutes that this daily candlestick has in terms of time. 4-hour time frame for more details. I would say a very key support zone is back here, looking at 58.76, 61.25, and 62. So I would say the low $60 range is a very important support the bulls want to hold. At this point, we bounced off of 64, so that is a higher low in favor of the bulls, keeping that daily uptrend intact. Look at the volume. Increase for volume favoring the bulls on the bullish reversal candlestick. The top of our bounce was 76.55, so that is our resistance. This is the range we're watching. We're pulling back. Bulls have to form a higher low and then see a higher high for the bullish MACD cross to occur. Again, same thing as the other two. The correlation is strong enough that the setup is very similar on all of these names. The hourly time frame, no red flags on volume, an uptick in volume with a lower wick telling me some of that is bulls buying the dip, and we're looking for a higher low and a bullish reversal candlestick. And one thing I do like about these setups is they are going to give us, to a degree, it's a bottom fishing play. And a bottom fishing play is where we have a very clear support level to be going off of. And if we were to drop down here on Litecoin into the $67, $66 range, I can look for signals to make an entry and place my stop below $64, because that means if we hit that lower low, I want to be stopped out. And I want to talk about stop losses in a minute. And when I go over my trade review, I will do that. So 15-minute time frame. Actually, we're on the hourly here. We're still consolidating. We're down at the low of the candlestick, so the bulls are not showing up yet. So we're patient. We're cautiously waiting here if we are all cash and looking for our entry opportunity. We haven't seen 2 green candlesticks in a row since the consolidation started on the 15-minute time frame, so that, again, tells us be patient. I need to see a break of this lower high pattern. I need to see the 15-minute time frame give me a higher low and a higher high, which will give me a bullish reversal candlestick on the hourly time frame as well, which is what I'm looking for. So patience as we consolidate. Let's go to Ethereum and my trades this morning. So Ethereum, I woke up this morning, pretty good timing just in terms of missing a lot of this downside move. And again, I was all cash overnight, sleeping like a baby, had nothing to be worried about on this big pullback. After a really successful day, I traded Ethereum. I flipped it 3 times and had my second best trading day in the cryptocurrency space yesterday. So that just goes to show you how utilizing technical analysis and being agile with your money on a down day, for the down day, and actually my best 2 days in the cryptocurrency space were after dumps. So counter the momentum, because I am a big fan of oversold bounces, very comfortable trading them. So that was my second best day. Today, I was looking at a support where I woke up and the $300 level was still holding at that point. So I was watching and making a trade based off of $300 psychological support. And it was on this candlestick right here. We had a wall of support at $300 and the price was at 302. So that's an easy one for me. Risk to reward. I enter at 302. I exit if 300 breaks. I'm risking about $3, but knowing that there's a key wall of support, whenever you have a very clear support level, either a psychological level or a ton of support on the bid, you know that if that breaks, there's going to trigger a bunch of stop losses. Everybody's putting their stop loss just below that support. An ideal scenario for me is to sell into that wall. If I'm here on the computer and I see $300 support and there's 4,000 ETH on it, and it starts getting chipped away, and then we got 3,000 and 2,500 and 2,000. I'm going to sell into that wall and not have to worry about the stop loss and the slippage associated with it, where everybody's market order gets triggered at the same time. If I cannot watch, however, I will still put my stop loss below support, but I'll make it a stop limit, knowing that everybody's stop losses are going to trigger as well. So we did eventually break $300, and we instantly dropped down to $290. So a lot of people had their stop loss at $299.90, and it ended up triggering at $295. I set my stop loss at $299.90 and had a limit at $297.50. So it didn't really fill me much on the way down from the dump, but we had a little bounce here. Let's look at the 5-minute time frame on this move. Need to find where we're at here. So here we are back here. And I got triggered on the bounce back. So we broke $300 support, and we bounced back to $297.99. So this candlestick right here filled me as my order was sitting at $297.50 as my limit. So rather than get filled in the low 290s, I got filled at $297.50. The risk there was the fact that maybe the bounce back doesn't hit my price, and then I'm stuck holding the bag. So it's very tricky dealing with limit stop loss orders and trying to not, get a ton of slippage on your stop loss, but also ensuring that you do exit the trade. So the lesson that I learned this morning is stick to your game plan. As you know from watching my videos that I'm a very short-term trader. You give me $10 in an ETH move in a half an hour, I'll take that every time. This morning I did not do that because the 4-hour RSI was so oversold, and I guess you could call it greed, where I wanted bigger gains. Had I just locked in that move, my day would have been made. That would have been a $10 move in 25 minutes. That would have been that. Instead, I tried to let it ride. I ended up getting stopped out for a $4 loss. So again, having that stop loss protected the trade to allow me to get stopped out with a $4 loss. And I'm not talking about $4 US dollars of my money. I'm talking about $4 of ETH. So if I had 100 ETH, a $4 loss is going to be, whatever that number is. If I had 1,000 ETH, which I don't, but if I did, then a $4 loss would be $40,000 of pullback. But that's what I mean when I say $4. I'm not talking US dollars. I'm talking about the price of ETH. So I had a $4 loss, which I can make back in one trade very, very easily. That is very comfortable for me to recover. If I don't get stopped out and it starts becoming a $10 loss, a $20 loss, then it's going to take me multiple trades to recover. That's something that I never want to have. I want to have my losers always smaller than my big winners. And the winner that I had 2 days ago, I was up about $33, $35 on Ethereum. So the fact that I would lose $4, that's really losing about 11% of my profit the other 2 days. And that's very easy to make back, and I did end up making that back by re-entering the trade at 295 or 297, and this is where my re-entry was. So here on the 5-minute time frame, we hit our low of 285, and we saw the top of the bounce up at 306.19, and this broke the lower high pattern. We broke this level of 297.99. We broke the level here of 305.94. So we took out key resistances, and there was enough power behind this move to tell me that we are likely to start seeing the bulls shift momentum. So on this consolidation, and I need to get our volume back here because volume is essential. So here we go with the bounce, and volume on this pullback wasn't scaring me compared to the bull volume on the way up. There was nothing standing out saying, oh, the bears are about to dump it back down to another lower low. So I entered here on this consolidation, and my average ended up being 297, and then I set my stop loss below this level of 285, perfectly accepting that if I get stopped out again, I'm still going to be well in the green from 2 days ago. So I was a little bit more higher risk with my re-entry here because I had such a successful day 2 days ago. So I re-entered, set my stop loss, and then went out and went for a hike because I knew I didn't want to be micromanaging this position and ended up pulling back. I probably would have exited here. If I was sitting here watching and managing this trade, micromanaging, I probably would have exited and gotten scared on this pullback, which would have been a bad decision. So we didn't break that low, and then the bulls took over, and as soon as we broke the high of the bounce of 306.19, that told me, okay, bulls are in control, you're going to have a profitable trade. So at that point, I ended up selling, wanting to lock in these gains, and I sold in the 318 range right here, because there was a wall of resistance at 320, and then as that wall broke, I bought the end of that wall, and that's a strategy that I discuss in the course where I talk about buying the end of a resistance wall because you know there's a lot of bull momentum behind it, and there's a lack of resistance right behind the wall. So I bought the end of the 320 wall at a market order, and I sold for a $2-3 gain, just another quick flip to lock in a bit more profit and be very cautious. We ended up seeing a nice solid move all the way up to 230 or 333. I could care less that I left money off the table. I locked mine in. I've had a very successful day, and I'm going to do it all again tomorrow. And that's my goal. My goal as a trader, some people have goals of accruing cryptocurrency. That's too high stress for me. I don't like the volatility in this sector. I love the volatility for trading. I hate it for holding. So I want to be in US dollars and just lock in more and more profit every day. And that's my game plan. So I can, take my however many dollars of profit today and start with a fresh, clean slate tomorrow and do it all over again. So where we stand right now on Ethereum, here's this pullback. Have not set a low on this pullback yet. Lower highs and lower lows. One more point about stop losses that I want to talk about. A pattern I've noticed now on this pullback in the big three the past 3 days is that we're seeing a very clear level, a psychological level with a ton of support on it at, first off on Ethereum, it was at 340. That was our first level. And we saw a dump of 340, and then the bulls showed up. So what I am seeing happen, and once it happened one time, I noticed it, and I could attribute that to a fluke, but it happened again today. What I'm noticing is the bears are taking out a very key level of support with a ton of support on it, flushing it, triggering stop loss orders, and then we see the bounce start to play out. So what that's telling me, and that's why we see volume climaxes, because it takes a lot of volume to take out the support wall. It takes a lot of volume when we see all those market orders trigger together, and then it's volume of bulls buying the dip. And I do believe that the bears, once they break a key support and trigger those market orders, that's their signal to turn around and cover. So I've seen, and when a short covers, they have to rebuy their position, which means buying coins at the ask. So I've seen twice now a key support level that looked like it would hold. It was broken, and after breaking key support, the bulls turn around. So that makes using stop losses even trickier. But again, I will never trade without a stop loss. I made that mistake so many dozens of times early in my career, and I cannot tell you how many setbacks I suffered because I did not use stop losses and I did not protect my trades and keep my losers small. Keep your losers small. It is essential if you want to do this long term and if you want to have consistency. So again, that $4 loss that I took this morning, I was wrong. I thought 300 was the bottom. It wasn't. I took that $4 loss. I can make that back very easily any day, let alone a day where we have a ton of volatility. So that was a mouthful. And I am going to be looking for a re-entry, but not rushing anything. Going to be very patient and picky because the day has already been made with profits, and certainly don't want to get myself into any position overnight that I'm not very comfortable in. So now I am going to, let's give away a free course. So I'm going to ask a question real quick, and I'm looking at the live chat now on YouTube, and whoever says my favorite color first gets a free course. I'm just going to wait until we get some colors flying in the chat room, and then once you get it correctly, we will be in touch. So just patient. Oh, geez. All right. I'm gonna have some scrolling to do. Looks like blue's the most common answer, and that's wrong. So just scrolling through. Still don't see it. Wow, still don't see it. I don't think I see it. Need to do another re-scroll here. Oh, wow, someone got it real early. All right, sorry. Michael N. Orange is the winner. Orange is my favorite color. Actually, Juan got it as well. And Joe got it as well. So there are a bunch of oranges. And I'm going to give it to there's a whole bunch. So I got to scroll back here. I'm going to give it to the first two people. And it's going to take a while to read through all these to see who exactly was first. But good color guesses, everybody. So once we get through that mess, I am going to open it up for questions. Not just yet. Give me one minute here to find the first two oranges. So Brett, P-O-F-F. I need to write this down. So Brett is a winner. And we got Mohammed Eldeeb is a winner. So you two are winners, and I will try and contact you through your YouTube accounts. And if we do not get in touch with you, get in touch with us, and we will give you that free course. All right, so now let's open it up to questions. If you have any questions about technical analysis or what I'm looking at, and then we will go over any altcoins that you have. In terms of my trading view, I do touch on that in the course, but I just have the two indicators. I right click and insert indicator. I add the RSI and the MACD, and it's fairly basic. Those are the two indicators that I use. And other than that, I change the background so it doesn't burn my eyes out. But it's a fairly simple setup. An inside bar is when the candlestick fits completely within the inside of the range of the preceding candlestick. So here we go. This is an inside bar. I can see the high and the low. I don't care what the real body of the candlestick is doing. It's only the range. So the high and the low fits completely within inside the previous candlestick's high and low. That's an inside bar. When the high of the inside bar candlestick breaks, it's a bull signal. When the low of the inside bar candlestick breaks, it's a bear signal. The signal is good for as long as the time frame you are trading on. If this is the 15-minute chart and I get a bull signal, I'm looking for a bullish move for 15 minutes. If it's on the daily chart and we get a bull signal, I'm looking for a bullish day. And it has been a really good indicator on this cryptocurrency space. We can see here, this is Ethereum. Back on the daily time frame, we had an inside bar, a second inside bar, a third inside bar, volume dropping off as we consolidate, and then a big bull move and a clear bull break once the high of the most recent inside bar breaks, and big volume behind that move. All right, so let's look at some coin. Obviously, I'm not going to be able to get to anything with everybody's requests here. Let's look at OMG BTC. I'm just going to bounce around for a bit longer and get to as many as I can, and then we'll wrap it up. So OMG BTC, big long lower wick of bulls buying the dip. Pretty big pullback, but again, we do still have higher lows. I'm looking at 1304, 1495, and now we have a higher low of 1672. Ideally, the bulls would have liked to have held this base. This was a nice base of support that was built, and that was down at 182. We did break that, but bulls bought the dip here. It's a pretty significant buying of that dip. So I look at the 4-hour time frame for more information. I can see we don't have a higher low yet on the 4-hour. And this is the same scenario where we're at with the big three. We have our low, the high of the bounce, and that resistance is now 22.8, and we have to form a higher low for the bulls to look to see a sustained turnaround and to see a bullish MACD cross. So this is just another lower high in this pattern. We have to form a higher low compared to 1672, and look for the bulls to head back up towards resistance of 2279, 228. We can round it. So bears in control in the short term, higher low, and a bullish reversal candlestick on the 4-hour time frame needs to form. Looks like Jason's putting out a discount, 10% discount code for the next 5 people. YouTube chat 10. And we will accept payment in cryptocurrencies. And the easiest way to do that now is email in info@thechartguys.com, and we'll give you our address and we'll set up that. We don't have that automated system yet for the cryptocurrency payments, but we definitely will accept cryptocurrencies. So let's look at Dash. So Dash Bitcoin. Same thing with the 4-hour time frame. Let's look at the daily chart first. So this is a nice higher low. If we can hold, this is a very key support for me, 6894. Make that 684. So 684 is a very key support to maintain this base of consolidation and keep a higher low. We have a higher low at 7122, and now the bulls need to turn around the 4-hour time frame. So we can see ever since consolidation started, we have lower highs and lower lows. We came very close to a bull break here at 818 and 817 at resistance here, just under 8.2. Couldn't break that level. That's going to be a tough resistance on the way back up. Keep an eye on it. And I can call that a tough resistance because of how many times we pulled back just under it. So lower highs and lower lows. We're coming off of our low and setting just another lower high at 7658. We have to break this level after forming a higher low. We need to consolidate, get our higher low, get our higher high, break the lower high pattern. And again, this level of 8.2 is going to be a very tough level for the bulls to get over because of how many rejections we have. If the bulls can get back over 8.2, it will be a very significant sign, and we won't have a ton of resistance levels back until the all-time high. But as far as right now goes, still very clearly lower highs and lower lows on the 4-hour time frame, with the bulls not ready just yet. You guys broke our website. It'll get back up eventually, and once those 5 get used up, obviously they won't be good anymore. So let's see another chart here. DTU SC99. We'll look into that as well. Thank you for finding the orange people out there. Digibyte. So Digibyte on the daily time frame, consolidating as well, and Digibyte's in a long-term downtrend. And we did just start to shift momentum in favor of the bulls, and we can see we hit our bottom, and here's where we got our higher. This was an equilibrium pattern. We had our low, high of the bounce, higher low, lower high, higher low, lower high, bull break on increasing bull volume, and now the bulls are trying to form higher lows and higher highs. They have a long way to go. They have a lot of work to do. I would say a very key level for me is 839. That stands out. You can see just visually looking at this chart, that was the clearest bounce attempt that rejected, and we've also rejected just below that level in the recent past. So getting over this level would be a clear change in momentum. We have a short-term change in momentum. The bulls are doing their best, but in order to come back and turn things around, you see the weekly time frame is still in a lower high pattern. So the daily time frame is starting to turn things around, but we still have lower highs and lower lows here. And to break the lower high pattern on the weekly, it's that 839 level. So it stood out to me on the daily time frame, and it's very clear on the weekly time frame. So we still have our low, and we have to break 839 to put the bulls back in the driver's seat on this weekly time frame. They do have some nice bull volume. You can see over the last 3 weeks, bull volume is definitely outweighing the bear volume, but we have to see 839 break for the bulls to be back in control. All right, one more here, and then I need to get going on a couple other videos to make tonight. Dash. So Dash, I already did Dash. Let's go with IOTA. So IOTA on the daily time frame, very significant pullback. And this is the kind of chart that you need to be very cautious on, because you can see on this bull run on the way up, we did not consolidate very much at all. So if you go straight up and you don't consolidate on the way up, you're going to go down very fast when we do begin to consolidate. So we have to keep that in mind. So anytime I see a move like this, I will be much more protective of my profits, because I do not want to see us enter the zone here with no supports. So the support that was very essential for me, just in hindsight, that the bulls needed to hold was this low right here. The low of consolidation at 75 cents. And then we held 76, 77, 7777, 79. So we still had incrementally higher lows. And then right here is the red flag. Even though there's a lower wick, the fact that we dipped down below there, that's when we started forming lower highs and lower lows, and a big volume dump here just yesterday. So we are trying to establish a new level of support, because we didn't do it on the way up. And looking down right now at 3.6, very significant pullbacks from the highs. And again, in this cryptocurrency space, this is why I will always lock in my gains, because they disappear so rapidly. How many people are, loving Litecoin in the $90 range, and now it's $30 lower, and they could have reloaded for 25% more position? So that's why we need to learn technical analysis to be able to recognize these signals. And we're not going to time the top and nail the bottom, but we're going to allow ourselves to protect profit and put ourselves in position to profit even on downtrends. So here, after our low of 363, the 4-hour time frame, same thing as everything we've been looking at. Lower highs and lower lows still. Here's the bulls trying to form their higher low. This is a bullish reversal candlestick, or I should say a bullish candlestick with a low at 51. We must hold 51 as our higher low and break the high of this bounce, 679. If we do that, we will see a bullish MACD cross again, and we will see a shift in momentum from very clear lower highs and lower lows, and it will shift to a higher low and then a higher high. And the next resistance after 679, I'm looking up at 777. That's the next level to be looking at. So very clear resistances and a higher low attempting. Let's check right back in on these big three here before we wrap it up to see how their 15-minute consolidation is following through. Still down at the lows, still no sign of the bulls, still very patient on Litecoin, Ethereum, and let's check Bitcoin. I assume it's doing the same thing as the others. And it is. So that was a solid bullish reversal hammer on the 15-minute time frame, but no confirmation and no follow through. So again, very picky at this point. And the bulls have to prove themselves to me that they are done consolidating from the high of the bounce from earlier today, and they're ready to show back up into tonight. And if I do not see those signs, I will very happily go to sleep all cash and start all over again tomorrow. Although knowing me, I'm going to set my alarm for every 2 hours and make sure I don't miss the bulls forming that high or low. So I appreciate everybody tuning in. Again, check out that course. Feel free to leave us feedback. Would certainly love that. And once the website's back up and going, once those 5 codes are used up, it will no longer be valid. But that bundle deal is still going to be going, and we will continue to be in touch and continue to put out the daily content and the daily videos. Again, cannot express appreciation enough for all of the interest in those videos, and it is the motivation that keeps us pumping them out. So I hope you all had a good holiday weekend, a good long holiday, and let's get back into this week now full swing and see what kind of gains we can get on this volatility. Have a great night. Thanks for tuning in.